The Korean economy is growing very strongly, and we expect growth to be 6.1% this year, and then easing moderately to 4.5% next year. What's interesting about the recovery is that it is now moving from a public sector-driven recovery to a more self-sustained private sector-led growth, which is a very positive development. And we also think that the output gap, which is the difference between output and its potential, is likely to close in the next few months. There are both upside and downside risks to our baseline outlook. On the upside, inventory rebuilding and investments could pick up faster than what we anticipate. On the downside, the risks come from the global economy. If, for example, there's a dip in global output that is more than what we currently have built into our baseline, or if there's a financial market event outside which affects capital flows to Korea and risk aversion. The crisis has highlighted once again Korea's dependence on exports, particularly to advanced economies. But we expect that demand for Korean exports will be growing at a slower pace than it has in the past as balance sheets get repaired in these economies. It is therefore important for Korea to come up with an additional domestic engine of growth, which means the non-tradable sector, such as retail sales or legal services or other kinds of services. And that will require reforms in a number of areas, including labor and product markets, increasing competition in the sectors, and reducing the incentives which favor manufacturing over services.